Hey, what it do, world? Welcome to Market Banter. This is the People's Financial Show, the People's Podcast. We do it for y'all. I am Dion Rabowen with you as always. I'm a financial journalist. I write the Axios Markets newsletter. With me is my man, the myth, the legend himself, New York City comedian and working stiff. He's looking a little rough right now because he's been hitting it hard. He's been hitting the pavement over the past few days. We got Dan Enfield. What's going on, Dan?
Oh, what's going on, man? You're a ray of sunshine on this cloudy day.
I do my best. Is it cloudy out there in New York?
It's pretty cloudy. Yeah, it's a lot warmer today though than it's been, which has been nice.
That's good. That's good. For those of you who don't know, I abandoned the city of New York in its time of need. I left it, and I'm out in sunny Phoenix, Arizona, where the weather is beautiful. There's not a cloud in the sky right now. So
Do
yeah,
you find that it's harder to tell time out there? Because like I think it was like Mark Maron had a great joke about LA. I feel this is true of Florida too, because like the weather's the same every day. It's hard to tell. Like you forget how long you've been out there. You know?
Yeah, it could be. Could be. I don't know. I mean,
Yeah.
I've found that I guess I've just come out here long enough, but like winter, there is a winter. It's just not like winter on the East Coast or in, the middle of the country, like where I'm from. So
Mm.
it gets really, really cold at night, like because it's the desert.
Oh,
So the
really?
desert nights, yeah. And I like to, go to the gym at night, or I'll, take a bike ride somewhere, and it's cold. It's legit cold.
Really? I didn't know that.
Yeah. Yeah,
I knew
yeah.
it
The desert
snowed in
gets
parts
cold.
of Arizona. I didn't know Phoenix though was. I thought it was just really hot all the time.
Yeah, no, no. Phoenix is the desert. But today we have a spectacular guest. We have Peter McNally. He is the global sector lead for industrials, material, and energy at Third Bridge. He's going to be with us. He's going to be talking oil. He's going to be talking renewable, clean energy. He's going to be talking airlines, basically everything that's moving in the world right now. We always bring you the best, most illustrious guest right here on Market Banter, and today is no different. We're also going to be talking a little bit of bond yields, inflation fears, and this tech sell off. So we'll be talking with Peter all about that. The 10-year yield is rising, which is really bad for me. Like I've got it. I always watch the bond market, but lately I've been low key obsessed because I have just recently purchased a house and I'm trying to purchase another one. Something I said I'd never do, and now I'm doing it twice. And I haven't actually locked in my rate on the second house yet.
Mm.
And I've been waiting, thinking that the bond yields were going to go down, and they just keep going up higher and higher and higher and higher, and it's making me crazy because I just keep thinking like, no, they're going to go back down. Everyone's going to understand that the Fed is going to buy a bunch more bonds, and that the prices are going to go up and the yields are going to go down, and it just keeps not happening, and it's making me very sad.
Mm. Well,
Anyway,
it's the little things in life that got to keep you going. You know.
yeah, yeah. That said, let's jump right into our conversation with Peter. Like I said, we're talking everything about what's going on, the big themes in the market. I was really excited because now everyone else is talking about inflation. I actually sent a tweet today because I get all the other business finance newsletters in the morning. And today it was like Dealbook and Robinhood Snacks and Morning Brew. We're all talking about inflation. And I sent this tweet, like their headlines were all like inflation fears, fears of inflation. And I sent this tweet where I had inflation fears, but my newsletter was from February 11th. Theirs were
Ooh.
all from today. So I was
Ooh.
like, yeah, a little like,
The
ooh,
good old
how's that?
Dion 2 steps ahead Rabowen strikes again.
Two steps and 2 weeks ahead, baby.
2 weeks ahead. 2 weeks
Uh,
ahead.
2 weeks ahead. Anyway, let's get into our conversation with Peter. This is Peter McNally, global sector lead for industrials, materials, and energy at Third Bridge. We have with us, looking super smart, he's got about 12 screens, Peter McNally. He is the global sector lead for industrials, materials, and energy at Third Bridge. Peter, what's going on? Thank you so much for joining us on Market Banter.
Happy to be here along with all my screens.
Yeah, that's how people know that you're a serious guy, that you know what's going on. They're going to hear your answers. And we also do the podcast. So I want our listeners who are listening on audio to also know, like, Peter's got the headphones, he's got the screens. He's not messing around.
No, we don't. We take things very seriously around here, even at home.
I think all business is the right word, right?
There we go.
All business.
Yeah.
All
Hey, so
business.
Peter, Let me just jump in real quick with a little bit of news of the day. I mean, what's your take on the sell-off we're seeing not only in electric vehicles but just in the entire kind of renewable space overall as oil and oil stocks have really just taken flight?
Well, there's a lot of moving parts, to all this. I mean, I think it really begins with a lot of capital that has flowed into this sector. Companies have found it easy to raise money. There's a lot of technological change that has gone on, and there's a lot of different companies trying different things. So that's one factor. Um, there is the factor of interest rates that have been on the rise recently. That future discounted cash flows are looking not quite like what they were as rates rise. So riskier investments, become, less preferred. But at the same time, there have been some hiccups in the market. You mentioned, like some of these EVs and things like that. There was a company yesterday called Workhorse that is developing an
Oh
electric
yeah.
truck, and
Yep.
like they
Hey,
didn't get a
Workhorse
contract.
CEO, friend of the show.
Yeah. So it's not all going to be straight up and to the right for any of these companies, right? This is a lot of new technology that's being developed. There will be fits and starts. At the same time, oil's been a bit of a different dynamic. It's an industry that has had capital taken away from it, and there's been less investment in that sector. It is the domain of some really large companies, but also some small ones have
Yeah.
disrupted it. We're talking about shale. But even those companies have been much more cautious about spending the money they have. Demand has come back, not entirely from what we had a year ago, but supply really has been a struggle to grow outside of OPEC. So those are the
Mhm.
factors that get us to where we are today.
Yeah, but I would just think as you're
Or are
seeing
you
the price of gasoline, Brent crude, WTI, diesel, all rising up to, yeah, I think we're at 1 year highs on all of those. They're up at least 25% just from the beginning of January now, that would be good for EVs, that you'd see Tesla and, obviously Workhorse is an individual case, but some of these EVs skying even higher. I wrote about it today in the Access Markets newsletter. The ICLN, which is the clean energy ETF, is down, I think, 7% year to date or close to 10% year to date, while XOP, which is the oil and gas ETF, is up about 40%. I mean, that's a huge divergence. And it's the opposite of what we saw in 2019 and 2020.
Yeah. Well, some of this has to do with why oil and gas prices have been on the rise, and a lot of this has been supply driven. It's not like suddenly people have stopped buying EVs and are going back to gas guzzlers. That is,
Yeah.
look, there's still a massive number of internal combustion engines on the road that will continue to consume fuel. But what is really going on has been supply driven. And one of the concerns our experts at Third Bridge have is this idea of peak demand, particularly in the U.S. gasoline market, which is pretty mature, but it's
Mm.
still the biggest market for oil in the world. And just for some context, like over the last 4 weeks, so you take out some seasonality and some week to week stuff, gasoline demand is down 12% versus the same period a year ago. Diesel, on the other hand, is actually up 6%. That recovery reflects the industrial
is
response.
that because of all the
Things have
trucks
gotten
and stuff
better.
like that doing?
Yeah,
Is that
there's
because
a
of all the
lot more
trucks and
activity
stuff
there.
like that doing e-commerce delivery,
Yep,
Peter?
it's trucks, it's rails.
Sorry, can you hear me?
It's yeah, it's. I can hear you. Can you hear me? You hearing me?
Yeah, I'm
I can hear
hearing
you
you.
now.
Okay.
I'm hearing you,
Sorry. I was
Peter.
getting another thing about. Okay. So, yeah, the industrial economy has been coming back. It's been driven by trucks, rails, that kind of industrial transportation. But work from home, unemployment, all these factors are limiting the response in gasoline demand. At the same time, longer term, there is this issue of EVs penetrating, the market, and we've seen things from like California, who's going to ban the sale of internal combustion engines in 2035, and GM pledging to go all electric next decade. Those things
Right.
haven't really taken
Yeah,
hold
yeah.
just yet. Those are longer term things, but we're actually seeing companies react now. And one of the trends that we've been following have been the closures of crude oil refineries to produce renewable diesel, which is a much more profitable market. It's nichier, but California has something called the low carbon fuel standard. Producers are incentivized to make renewable diesel, and some uneconomic refineries are being converted from processing crude oil to taking things like vegetable oils and fats and things like that and turning it into a usable fuel. So it is one of the
So Peter,
environmental.
Peter, can I stop you real quick? Because none of this sounds good for oil. This all sounds very bad for oil and gas, but they're blowing up right now.
Well, there's two things going on. I'll go back to my earlier point on supply. It has been constrained both at OPEC and in the U.S., which are like two of the three biggest buckets, of supply. The third being, Russia, who's part of the OPEC Plus agreement, but not a formal,
Right.
member. But at the same time, the U.S. has been a mature market for quite some time for oil demand, and the real growth is coming out of China and India. And starting in the middle of last year, particularly in China, they stepped up their imports of crude oil. And those emerging economies like that are driving a recovery that we see happening in 2022. The market was about 100 million barrels a day back in 2019. It dipped to about 90. Our experts think this year, 2021, will be about 96. And some point, late next year, we will get that full recovery. But it's not really being driven outside of the U.S. At the same time, we talked about the capital constraints of U.S. supply, which has become a major force in the oil market. It's just not coming back, even at higher prices. It's going to take sustained prices for at least 3 months at current levels, we think, and then another 6 months of drilling activity before we start to see a material response in U.S. supply. So in this situation, we could see this persisting for some time.
Okay. So I want to ask you then,
Oh.
what is at this point, in your eyes, the best opportunity in the energy sector
Boy,
overall?
I mean, look, longer term, the alternative energy sector is still where you want to be. I mean, energy consumption grows less than GDP. Okay, but the share that will be going to renewables, is going to be increasing. So it's less fuel, it's less things like coal, oil. Is a sub GDP kind of growth area, but the areas really around wind and solar are the areas that are going to see the best long-term growth. And there's all things to do, along those entire supply chains. They're not as mature. It's complex. As we said, earlier talking about some of these EVs, it's not going to be smooth. The growth rates,
Yeah.
but that's the opportunity that we see today.
So what I hear you saying is buy the dip. Is that that's what you're saying?
Well, I mean, that has been the pattern,
BTFD?
for some time. For some time, that has been the case. But I think you do have to watch, where you're investing. I mean, there are places, in the world where like there's too much wind, solar, coal, natural gas, however electricity is generated, where you have excess capacity. You can have the opposite of what we've seen in Texas over the last week, where you actually can have negative prices. So it's not, just be careful of where these plants are being sited, and that there isn't too much capacity already that is cheap on the cost curve. Would be the point.
All right, Dan, you want to jump in here with a question?
No, it sounds
No,
really
I
great.
guess
I
he
think
doesn't.
Peter really seems like it's pretty clear where the trends are going, and it's definitely good to be aware of for sure.
Yeah. Sure.
Yeah. Peter, last question I want to ask you is about the airlines, right?
Yeah.
The airline stocks have boomed, and I've taken 2 flights, well, I guess 4 flights in the last few weeks. I flew Phoenix to Washington, D.C. and back, and then I flew Phoenix to Miami and back.
Yep.
My Phoenix to DC flight going out was about 70% full. Coming back was about 25% full. I had my own row. I was laid out. Like I got 3 bags of the little, whatever the food is they give you now. But then going to Miami, 100% full on the way out there, 100% full on the way back. Pretty sure I got the Rona. What's going on with the airline sector right now? And is the growth that we've seen in those prices sustainable?
Well, the only thing we're seeing in airlines right now are leisure travelers. Okay, there's no business and there's no long haul international. And when you're going to a place like Miami, it's a leisure destination. And same thing with Phoenix. I would say. So that has been the driver, but that is normally not the profit driver for companies like United, Delta, and American that cater to the business traveler and long haul international, and that's where the real profits lie for them. But until we get open borders and widely available vaccines, that's just not going to happen. So they are competing with Southwest Airlines and Allegiant, Alaska Air, these more consumer-oriented airlines today until that market comes back. But, an interesting exercise that we went through is we looked at the revenue recovery expectations for airlines. And the last airline on earth that we found is publicly traded that's going to recover to 2019 revenues is Air France KLM. This is in US and Europe. And the first one that's going to recover to 2019 revenues is actually Spirit Airlines. And that is as low cost as you can get. Flying taxis. But the model of catering.
Flying taxis is too kind, sir. Flying
they're black
taxis
and yellow.
Too kind.
They're black and yellow planes. But that's where the market sits today in terms of that recovery. I mean, we've had people like Bill Gates say that half of business travel is like never coming back. Our experts at Thurbridge don't believe that. They've done all kinds of survey work and have done the analyses of past crises or how the fax machine was supposed to kill FedEx and that didn't happen. Business travel will come back. It's just going to take longer. In the meantime, the companies that are seeing the revenue respond, it's never been as fast as anyone had really hoped, are things like Spirit, Allegiant, those kinds of airlines.
So Peter, what I hear you saying is buy the rip in airlines as well.
Well, I mean, if there's one thing I've learned, through the pandemic is that investors don't stop giving money to airlines in the United States.
Yeah.
And nobody has gone bankrupt, right? I mean, the Pfizer vaccine was announced on a weekend, and by Tuesday morning of that week, American Airlines was issuing stock. All these airlines have been able to raise liquidity, which has pushed out a lot of real restructuring. Sure, like planes are being retired, and we've kind of accelerated that process. Europe is a little bit different because they've taken a lot more government funds, which restricts what they can do, and it keeps their cost structures high. And there have actually been some wildly successful leisure airlines in Europe that are feasting off what the markets that those major carriers in Europe can't serve. So,
right.
The airlines, in the U.S. are if this recovery does materialize, nobody's running out of money anytime soon. I would just caution that until this first quarter, they have consistently overestimated the pace of recovery. They gave some very conservative guidance, I would say, relative to Wall Street expectations for the first quarter, almost shockingly so, that it wasn't coming back. That said, the second and third quarters are far more important for seasonal travel than the first quarter of the year.
All right, but so Peter, I got to get the answer from you though. Buy the rip, yes or no?
Oh boy, I'm gonna say no. I mean, it's it's an industry.
Taking the hard stand.
Look,
Yeah.
Look, it
All
is an
right.
industry that hasn't had to go through a real restructuring. Um,
Yeah.
Look,
Well,
I can make the
no
case.
industry has, right?
Well,
Thanks to the
but a
Fed.
lot of industries, like we talked about some things that have come back, quickly. If you're like rails, or just sort of in our world of things like rails and transportation, cargo shipping, certain chemicals, steel, like all these things are coming back. Airline passenger demand is still like the furthest way off. Look, I can make the
Yeah.
case, sure, that there is pent up demand for travel. There's no doubt,
Right.
and I even heard a great question first time. I think it was on one of the major airline calls. Like, could prices spike for airline tickets if vaccines are widely distributed and everyone wants to travel? And it's like it is a possibility, that we could like run out of seats pretty quickly. But boy, there's still a lot of capacity left in the
Yeah.
industry,
Still a lot of
and
capacity.
what we
Mm.
still don't know is that what the industry is going to look like going forward. So up until 2001, airline passenger revenues were somewhere between 80 and 100 basis points of GDP. Is how you could look at it in the United States. And post 9/11, that dropped into a 60 to 70 basis point range as some shorter routes just didn't make any sense to run because of the added time for security. And people now take the train from New York to Boston, more often, or just drive instead of all those shuttle flights. Um, Obviously, in that equation, both the numerator and denominator have now dropped. GDP went down too. But when we start looking into like 2022, we're not totally sure if that ratio of what people are willing, as passengers are willing to spend on airlines relative to GDP is going to hold.
Mm.
So,
Yeah, especially if fuel prices keep going up the way they have. Peter McNally, global sector lead for
Mm.
industrials, materials, and energy at Third Bridge. Peter, thank you so much for being with us here on Market Banter.
sure. Great to be with you guys.
All right, so yeah, that was Peter McNally, global sector lead for industrials, material, and energy at Third Bridge. A lot of good stuff. I
Yeah.
think we are, and I said this in the Axios Markets newsletter probably a week or two ago. I think we're entering a new phase of the market where
What is
things aren't going to be like they were.
Yeah, for sure. What does "by the rip" mean? I've never heard that one before.
So there's the dip and there's the rip. Dip is when stock prices fall. Rip is when stock prices rise. So it's like they're ripping higher
Mm.
is the rip.
So
So
by the
yeah,
rip means get on the train. Get on the train.
yeah. By the rip means stocks are going higher. You better get on the train and buy.
Mm.
Which is it's kind of a joke, but also at this point not.
Is that your term, by the
Um,
rip, or because I like that?
no, 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 this is not.
Okay,
No, this is
okay,
a thing that like Wall Street bros say.
okay.
Yeah, yeah.
Thankfully,
It's
I avoid that crowd, so I'm not as well versed. It's probably a good thing
I
that I'm
am
not in.
I am paid to not avoid that crowd.
Yeah, right.
So
You're paid to
there
be
you
knee
go.
deep in that crowd,
I'm paid to be knee deep in it, baby,
right?
and that's what I am. So Dan, you have had a very important life experience recently. Would you like to talk
Yes,
about that before
I
we
think we
get
both have.
into the market
Uh,
and
yeah, so I got the COVID shot like a week ago, and everyone's been asking me about it, and it's like so weird to get any kind of like attention, because no one cares about me. But I've been I've been just everyone's really curious, and if
yeah?
my comedy career had half the attention that this COVID shot got, I'd be going I'd be going places.
I'm saying if only you could do comedy right now. Although, can
Right,
you?
right.
Have they opened the comedy clubs back up in New York?
Nothing. No, it's everyone's clamoring for it. I follow a few comedy club owners on Twitter. They're like railing against the city right now because apparently, like Juilliard and the New York Philharmonic got these like massive bailouts recently. And this one
Ah,
comedy club owner in particular has been going nuts because he's like, they're rich, nonprofits. They don't need it. Whereas, I'm just a
right.
small business owner, where's my bailout kind of thing. And
Yeah.
yeah, so no, still no comedy clubs, but I'm hopeful soon. The Knicks, fans were at MSG last night for the first time, which was big.
I heard about that. I heard
Yeah,
about
yeah.
that. Yeah. I may have read this on the internet, but I hear strip clubs in New York are opening back up,
Well, that
which
would surprise me because if strip clubs can open, I don't. I mean, I guess they serve food, but I don't know why comedy clubs and other stuff can't open. So, I mean, live
yeah,
music has been just hammered by this, obviously.
right.
So, I'm really curious to see how.
I think I said this before, but I really thought strip clubs were going to be just absolutely decimated. And I think that still is to be seen because I
Mm,
can't imagine they're allowing lap dances at this point. And
right.
so I just have to wonder for the young ladies who work at these establishments, that's how they make all their money is the lap dances, like
Oh, is
the
that
stage
the big
and
moneymaker?
yeah,
The
yeah,
lap
that's the
dance.
big money
Okay.
maker. The stage and all that is just kind of like advertising. And what they really want is to
So
get
I've
you back
heard.
there and I've done some extensive reporting on this. I actually
Right.
really have. This is a true
Okay.
story. Um, but no, I mean the VIP rooms and all that stuff is where they really make the money. And so I just don't understand. I don't know how lucrative it can really be if you can't do that. But then again, maybe that's open back up and you still can't go do comedy yet. I don't
Right.
know.
Yeah, you're right. It's really bizarre what's being allowed and not. So it seems that things are, the general consensus I think amongst most people I talk to in this area is that it's going to start all opening up fairly soon. So I hope that's the case. I didn't realize how big of a Broadway shuttering really hurt the city economically. I mean, I didn't realize how much
Oh yeah.
stuff runs off Broadway. It's crazy.
Oh yeah.
Oh
Yeah,
yeah,
yeah. That's the thing. There are so many industries in New York that are interconnected to one another. And
totally.
that's
Yeah,
true about a lot of places. Like I'm sure, not being able to have fans in the Cavs arena has just killed Cleveland because they
killed it.
built that whole downtown
Right,
around that arena. And so I have to imagine, yeah, there's tons of small business owners that just have been absolutely shellacked. Small businesses, and I've been writing about this in the newsletter, have just really gotten it bad. And part of the reason has just been there's not an effective means of getting them money. Like they just re-upped PPP in the last stimulus. There's not really a plan for them in this $1.9 trillion stimulus, except for, maybe more PPP. But PPP really isn't that effective.
mm,
And yeah, I've read through and written about a bunch of surveys. So it's been really tough for small businesses, particularly black owned small businesses,
mm.
particularly women owned small businesses.
Well,
Um, but
PPP has got to go to your payroll mostly, right? But if you've laid everybody off, what good
exactly.
does that do you?
Exactly, exactly, which
Yeah,
is what they're saying. So they open it up a little bit in the second PPP, which was part of this last stimulus that Trump signed. So it's now you only have to use, I think it's like 60%. Don't
yeah.
quote me
The
on
the
that.
ratio went down or something. Yeah, yeah.
Yeah, the ratio went down pretty significantly, which was good. A lot of small business owners said they liked that, but also it's still, there's got to be some kind of metric where they're not just handing out money, which a lot of economists say no, you should just hand out money. Just give people
Right,
money. It'll be much more effective than trying to put all these strings and, blah blah blah
right,
blah.
right, right. I wonder if there's like a small business owner that's going to try to like hire their landlord as an employee so they can like pay them. Hey, you know, this
Yeah,
guy works for
yeah.
me.
Yeah, he works for me. He makes
I'm sure there's,
$3,500 a month.
yeah, I'm sure there's got to be something, some kind of. I think the word is chicanery going on. So
Oh, there's lots of chicanery going on.
yeah,
Absolutely. That's a thing that's going on for sure.
you had a big
Um,
life event go on too. I heard.
oh, I did. I did have a
Yeah.
big life event. We were talking about it a little bit in the intro, but I bought a house.
Wow.
And for a lot of people, like you say, I think you've heard my rant on home ownership, or maybe you've seen it.
I
I'm
watched
on
a
the
movie on
internet.
that. Yeah. Yeah.
Yeah, I'm on the internet as having said buying a home is a terrible investment.
Hmm.
It's on Yahoo Finance right now if you want to look it up.
Ooh.
You can see the video, read the article. I'm very much on record as having said all this. And I still stand by it. However, the reason I wanted to talk about it on the show and the reason that I'm doing it is not because of the typical, like, I want to be a homeowner. I still think that's dumb. But what's changed is ever since QE forever, right, in March 2020, when the Fed pushed interest rates to zero and started buying, and said that they would buy an infinite number or infinite amount of government bonds and also corporate
Mm.
bonds and basically everything else, everything changed when that happened. And that's why we're seeing a lot of this GameStop stuff that's going on, which just picked up again this week. GameStop up 100% in a day again. We're back here. It's why you're seeing the housing market go so crazy because again, people need to put money. So there's one, not a lot of trust in the stock market. People see where the valuations are, they see how high stock prices are, and they see the actual state of the economy, and they're like, this doesn't make any sense. I don't want to put all my money here. But also, and this is part of why it's happening, you can't get any money in bonds. Treasury bond, the 10-year US Treasury bond, which is where you loan the government money for 10 years, pays at this point 1.4%, which is practically nothing.
Low,
My
low.
Goldman Sachs, yeah, my Goldman Sachs Marcus account, which is by definition a high yield savings account, has a yield of 0.5%, which is
Wow.
not high. Yeah,
Wow.
I remember the day I got that email being like, "We've changed your interest rate. It's now
Ooh.
0.5%."
Ugh. What was it
Yeah.
before?
I think when I initially got it, it was 2.5%.
Ooh.
So it's gone over the course of maybe a year or two from 2.5, maybe 2, I think it was even 2.75 at one point, all the way down to zero point 0.5. So you can't just keep money in a savings account. You can't even keep money and earn any kind of respectable yield in treasury bonds because you're getting essentially nothing in return. So you kind of have no choice except for to go into the stock market, which if you look at it, right, like Dan, you said this a bunch of times, it just doesn't seem like it makes any sense.
None. Yeah.
So what do, right? Where do you put your money? What can you put your money in? And I finally had to settle on a house because not only does real estate, appreciate in value, blah, 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 but because of this whole digital gig economy, because of the way people have been priced out of ownership themselves, there's a lot more people looking to rent, willing to pay a lot higher prices. And there's
Hmm.
people on Airbnb who, for whatever reason, rather than staying in hotels, they want to overpay to stay at somebody's house.
Right.
And
Maybe they
those
feel
are,
safer with COVID and stuff. Who knows? I mean,
yeah, exactly, exactly. The virus as well as part of that. So it just, when I look at what could happen, I found a house where I can live in part of it, I can rent out part of it, either on Airbnb or to a long-term renter. Again, within the guidelines and laws of the municipalities that I am living in, I would not ever think of violating those rules and regulations. Let's be
right.
clear. Wouldn't dream of it. Only renting out or Airbnb the amount of space that I'm allowed to. But that's going to help me or pay off all of my mortgage while also
Hmm.
I have this asset that's appreciating in value. And even if it declines or loses value, it's a hard asset. And as even as they're building new houses, they're not like supply is not even anywhere close to demand, especially in a place like Phoenix and in a place like Denver, which is where I'm buying these houses. So it
Wow.
just, I really was forced into this move. And I guess, I don't know, forced is a little bit of a strong word, but like I maintain that buying a house is not a thing that I would have wanted to do. And it was one of the most stressful, it has been. I'm still making moves on the house in Denver, but it's been one of
Right.
the most stressful experiences of my life.
And think about
Um,
you. It's like you're a professional guy. I'm assuming you got you're credit worthy. You're not the guy that you would think would have the hard time with it. And think about how bad it
right.
was for you. I say that
Exactly,
all the
exactly.
time.
For someone,
Right. Right.
yeah, like I've got a pretty high credit score. I had, the money for the down payment. I can't
You're on
imagine.
television.
Yeah, they're like, oh yeah, you know what? Yeah, yeah, sign him up. No, I can imagine how hard this process must be for someone who's got a lower credit score, like a below 600 credit score, who needs down payment assistance, or someone who has just scraped by enough money because they ask for so much documentation.
Crazy.
It's like your bank statements are not enough, and that
No. No. Not
literally,
even close.
I mean
Yeah.
that literally, you know what I mean? Like I'm giving them my
Mm.
bank statement, social security card, driver's license, like all this. It's insane the kind of access that they want to your personal information. And so it's been a real grind that I'm still not through, and I wouldn't recommend to anybody. But it's like if you have to put your money somewhere in this crazy world, a house looks
Mm.
like an attractive place to do that compared to your options right now.
A good
And that
point.
just
Yeah.
hasn't been the case for so long. And now it is. And I think that's why you're seeing these just insane numbers on the housing market. Like housing, the S&P Case Shiller index just came out yesterday, and it showed housing up 10% for the year again. 10% for a year is insane. That's like we're back to basically 2006 levels, which is the height of the housing bubble, in terms of the way that prices are appreciating, in terms of the way that sales are going on. In a market like Phoenix is growing nearly 15%. So it's just stupid. It's stupid. And that's reflected in trying to find a house. I can't tell you, I think I was outbid on close to 20 houses that I actually went and got. Like you have to get a lender note, which your lender says this person is authorized to borrow this much amount of money, and then put an actual offer on a house, and then got outbid by someone who was like, I will pay you more money. And I
Mm,
swear, I think that happened like 20 different times.
jeez, it's crazy.
Yeah. And I can, from different lenders I work with to different real estate agents to just people associated with the housing market, the one thing they all said consistently was, I've never seen anything like this.
It's nuts.
Never seen anything like this. And I think that's just going to continue, and it's just going to get worse. And I feel so bad for people who want to genuinely just like buy their first home,
Hmm. Well, you
because,
scared me
yeah,
off.
good. That was the goal, was to
Do it
once
to me.
again scare people off. But if you're in Phoenix and you're looking for a place to stay, please
There you go.
stay
Yeah.
at my home in my newly, I guess it's not out on Airbnb yet, but if you're watching this sometime in the future, maybe it'll be available on Airbnb, again following all local laws
Following
and
all local laws.
regulations.
Yeah. The last thing I'll say before we wrap up is I visited my friend in Miami last year in his condo in downtown. And I guess in Miami, you can do half Airbnb, half rental. So like this guy's a
Mhm.
married guy with two kids, and I go to his apartment, and half the people and you could very clearly tell who was like the Airbnber and who was like the resident of the building.
Yeah.
I'm like going to visit this guy and his family, and there's like people doing like beer bongs in the hallway. Somebody like threw up. Oh, it's terrible. People were like on spring break. It's like, oh, I wouldn't want to live there. It's like crazy.
Yeah. Wow.
Yeah, true
Yeah.
story.
Yeah, this is the world we live in today. Like this
Not,
is how insane everything is. And we can thank QE forever and Jerome Powell.
yeah, wild stuff, man.
Wild stuff. That's gonna do it for Market Banter. End on a positive note. For my man Dan Enfield, New York City comedian and working stiff, I am Dion Rabowen, financial journalist. Thank you all for tuning into Market Banter, the people's financial show. Stay tuned. We'll be back with you next week.